basically, as number one, I want to welcome everybody to the room. It's nice to see some new names and new faces, and there is the basic way, or the primary way we do our trading is we identify initially the strongest pairs or the currency, the feature currency of the week, and this is the currency that, if it's the strong currency, that is the currency that we're focusing on buying. And we also try to identify the weakest currency, and that will be the currency that we primarily are focusing on selling it. So we always want to be long on the long side or on the strong side, and we always want to be short on the weak side, or so. And that, having that combination of buying the strong and selling the weak, in particularly when you're dealing with foreign exchange, because you're buying one currency in terms of the other. So whenever you're buying the strong currency and selling the weak, that divergence, which is basically what we are all seeking to make money, that the stronger, or the one that we are long, will actually move farther than the one that is weak, and that divergence between the price of the two currencies increase, and that what will make us all money. So with that, the first thing we do is identify the strong currencies and the weak currencies, and the way we do that is we begin looking at what we call the indices. And the indices is a basket of currency, of that specific currency versus all the other currencies, and these are the primary indices that we have. That's the dollar, that's the Australian dollar, that's the British pound, and it's the British pound against everything. That's the Canadian, the euro, the Swiss, and the yen, and these are the majors. So the first one, of course, we're going to look at is the granddaddy of all, which is the US dollar, and we are going to look at the weekly chart. And as you can see here, it is if you are dollar based, it is not a pleasant sight to be looking at. The primary direction of the prices, as you can see, it's coming from all-time high all the way down. We are pretty much near the lowest value ever for the US dollar. At the 80.38, which is like of the week of September the 24th, we broke through a structural point, and that was the beginning of the new leg. I mean, the dollar has been in a bear market for a couple of years, but that is the beginning of a new leg in the bear market. And you can see that once it has broke the structure, it has broken it with momentum, it has broken it with speed. So there is this continuous liquidation that's coming into the dollar, and that would indicate, and that is the evidence to you, that the right side of the market is to the downside, and we should expect the selling in the US dollar to continue. Probably we might get a pause, not as, I mean, we never buy when the prices are coming down. We're never going to put and say, if there is support at 77.27, we're going to be buying there. You never do that, because this, you're catching a falling knife. If this is coming down, either, so we're looking to be sellers. All what I'm saying is we might get a pause at or around the 77 to 72. So we do have another maybe 60 or 70 points on the index before that decline might, and I underscore the word might, but we should be continuing, the dollar should be continuing its decline. The second currency we're going to look at is the Japanese yen, and on the weekly chart you can see that this is primarily the inverse of what we are seeing on the dollar. This is pretty much near the all-time high, or pretty close to the all-time high versus the US dollar. It's not there yet, but it is pretty close. It is breaking. It had a strong week. It broke above the prior week's high. It is pretty much ready to break above the last 4 weeks. So that is an indication that the yen is strong. And the interesting thing is that with all the comments that's coming out of the Ministry of Finance in Japan and of the BOJ, hold on a second guys, and of the Bank of Japan, they're trying to bring down the value of the yen. They did a couple of interventions, but so far to no avail, and this is a good close as far as the yen goes, and should give us a continuation to the upside. So this, when we looked at the dollar is weak. Looking at this, the yen is also very strong on the opposite side. And I want you to take a mental picture, because we're going to gauge which is the strongest of the strong and which is the weakest of the weak. So this is strong. The other currency that we're going to look at is the Australian dollar. And of course this is the weekly chart. The structural point was the 91.43. We broke above the 91.43, and now we have flew, and we're trading now at the 96.38, which is pretty much close to, again, an all-time high against the other currencies. So that is very strong. The closing, or the range of the week, is healthy. There is no indication of a possible reversal. That is a strong close. If you look at the daily chart, you can see that the trend is very nicely to the upside. It's continuing to roll up and move higher and higher. So the Australian dollar is very strong. And if you look at this chart, that's the chart of the Aussie. If I go back to the yen, you can see the yen is also moving. But if I'm going to make a comparison between the yen and the Aussie, you can see that the Australian so far is stronger than the yen. So the yen is strong, but based on the charts, the Australian is stronger than the yen. So now I'm going to put the Canadian and as you can see from probably the April, we can go back as of October of last year, 2009. Actually, we're now October. We have been trading in a range of the 97.88. These two lines, this was the high that was set in October October 09, and we have been in that congestion now for close to a year. We are easing to the upside. We are pushing higher, but we have yet to break the 97 or the 98 handle. So this number, as you can see, is 97.95 or 97. Few pips in the foreign exchange market doesn't really mean much. So we are sitting at the 97.80, the 98 handle, and we have been trying, or the Canadian have been trying to break above that 98 level now for a whole year, and so far has failed. So in this case, it is kind of a neutral. It is not that extremely strong. So in our hierarchy, the Aussie is first, is the strongest so far. The yen is the second strongest. The Canadian is kind of neutral because it's moving sideways in this congestion now for close to a year. Okay. Then we are going to go to the British pound and take a look at the British pound. Yes, we have came back above the structural point of 156.99 or 157 handle. Let's make it the 157. Okay, and we did push above that on the week of August the 6th, only to fail. And now this week we did trade above the 156 or the 157, if you will, and we closed, yes, 100 pips above it. But as you can see from this movement, compared to the Australian and compared to the Japanese yen, it is pretty much similar to the Canadian. And if I want to gauge between the pound and the Canadian, which one would you think is stronger? Is the pound stronger than the CAD, or the CAD is stronger? I'll put the CAD for you back again. That's the Canadian. It is pushing. It has closed positive for the week. It is pushing towards the 98 handle. It has closed towards the upside. Exact. And if I look at, exactly guys, if I look at the British pound, it has slid off. It has closed inside. So yes, so the British pound is weaker as a technical formation than the Canadian. So in our hierarchy, the Aussie is number one, the yen is number two, the Canadian is number three, and the pound is number four. Last but not least, we are going to go to the euro. And that, ladies and gentlemen, is the currency of the week. That is a remarkable piece of technical trading and the beauty of price behavior. We have seen last week all the stuff that has been said about Ireland and all the stuff that's been said about the Irish Bank, Allied Irish Bank, and all the problems that's happening, and the downgrading of Spain debt, all that stuff, all those negative news. And believe it or not, these problems in the Eurozone has not by any means have gone away. But if you look at this chart, that here is the upside down picture of what we have seen in the dollar. That is a positive trend change in the euro as soon as it broke the 133.28, and breaking above the 133.28 to test last week the 135 handle, and only to move this last week approximately 300 pips and to close pretty much near the high of the day, or the high of the week. That is remarkable. And that again is the difference between what is actually happening in the market and what people perceive that should happen. Fundamentally, and all that stuff that's going out in the market, everybody and his will perceive that now, we have to short the euro and everything like that, and the market is being irrational and it's flying irrationally to the euro is moving to new highs. That kind of irrationality, that is the consensus within the market, and we should not fight that market consensus. If the market believes that the euro should be going up, and we do now have a technical trend change, be it that now we are moving to the upside, so that is a very powerful break. It has broken the 133.28 with momentum. So with that, we should be looking at the euro to continue to the upside and probably to test back the 142 area. And if it breaks the 142 area, we should be looking at a retest of the 150 handle. Now, so if I'm also, there is another beautiful thing I wanted to share with you today, and I want you to look at those two arrows, and it is something that is pretty much a rare event, but it is important point that I would like to share with you. I want you to look at this price point over here, which is around the 137, 138, 137.30. Let me put this like that so you can see it. When we broke, that was a small structural point back in 2009, and when we broke above that structural point, let me show you. When we broke above that structural point, right there, we put the high towards the 150. When we broke that point, even here, when we broke above that structural point, it took us pretty much towards the 145. That was the second time, and it was also the top of the failure when the big leg, the down leg, started to the downside, and it is now the new structural point right here. So the 130, I'm sorry, this is the 130. So that break over here of that structural point as the beginning of the trend line to the upside, and that is also the same break to start the move to the upside, and it is also the same structural point that we had here. So this is a structural point. The 133.28 is a structural point that was the beginning of 3 times when the euro had an expansion or had a major move to the upside. So with that, we cannot disregard this. We cannot foresee that. We can say that fundamentally the problems in the eurozone is too big, so we're going to the analysts say we're going to short the euro. No, this means that the market has discounted so far all the negative news about the euro. Everybody, all the information in the market now, all the bad news seems to have been discounted, and if we are going to be trading in the euro, we should be looking at the euro from the long side until we get a reversal signal. And thus far, we have nothing that would indicate for us to sell the euro or to get out of the euro. So, having said that, so let's do our hierarchy. The strongest currency, bar none, this week, and that should be the currency, our focal point this week, is the euro. So the euro is the strongest. It is followed by the Australian. It is followed by the Japanese, the yen. It is followed by the Canadian. And the weakest of the strong is the British pound. And the currency that is solely weak is the US dollar. So we will be looking for short entries to short the dollar, and we have about another 50 basis point or maybe 60 basis point on the index until we test the 77.72. So we have probably another 50 points or 60 points on the index. So that would translate itself in about maybe 100 or 150 pips individually on each pair before we can begin to see a pause in the US dollar. The second, as I said, the strongest of all currency is the euro, as you can see, then followed by the Australian, then followed by the yen, and then I forgot to do the Swiss franc, and then followed of course by the British pound. So let's do the Swiss franc. That is powerful too. The Swiss is very strong. I think the Swiss and the euro are quite a tie. I mean, there is a tie as far as the strength between the Swiss and the euro. So in first place, it depends which one you would be taking as the strongest. You'll be looking at the Swiss or you would be looking at the euro. I personally would favor the euro. One, because we're coming out of a bear market in the euro, and that might imply that we are in a short covering move. So that move would be nice, extended and pushing higher. So there is nothing wrong. I mean, I would be rather taking the euro longer than, and my second choice would be the Swiss franc. Also keep in mind that the Swiss and the yen are not particularly, the Swiss government and the yen and the Japanese government are not really too excited about their currencies moving higher. So my first choice would be the euro, then the Swiss, then the Aussie, then the Canadian, the Aussie, then the yen. Let's start again. So the first choice will be the euro, number 2 would be the Swiss, number 3 would be the yen, number 4, Jesus Christ, I'm sorry guys, let's start again. The first is the euro, the second is the Swiss, the third is the Australian, the fourth is the Canadian, the fifth is, or the last week, is the British pound, and the one that we are, hold on guys, I only have one screen, and the one that we should be looking to short is the US dollar. Okay, so let's stop this and let's